Welcome. We've got a really important money talks for you today. We're going to talk about some of the recent events in both the economy and world events, as well as the crypto industry, all happening right now. We're going to talk about risk management practices and policies Abra has in place to protect our users. Our CFO and Chief Risk Officer will join us in just a bit. Abra's Bitcoin analyst, Natalie Burnell, is here with a deep dive into what's been a crazy week. And we're going to hopefully get to all of your burning Abra questions. All right, let's do this. Okay, before we get started, our standard disclaimer, this content is for informational purposes only. None of the information provided contains or is intended to be investment advice with respect to topics discussed, especially regarding the legality and investment in digital assets. Okay, so let's get into it. It's been a crazy week. I've got some charts I want to show you. I've been avoiding charts lately just because the macro conditions are so crazy. A lot of this is broader economy, but I think it really relates to what we're going to be seeing in the broader crypto space as well in the coming weeks. So this crazy bunch of squiggly lines here is the ISM PMI number, which is basically considered a leading indicator for what's happening in the broader economy. And it has to do with purchasing managers in supply chain and manufacturing economy. Generally, when that white line is falling and it approaches the 50 number you see on the right-hand side of the screen, it tends to indicate that we're heading towards or are in recession. And it is plummeting right now. Now, to put this in context, okay, this is something that Raoul Pal published last week, which shows the inverse correlation between the ISM and the two-year over two-year percent change in bond yields. And you can see bond yields are skyrocketing because the chart is inverted, right? So, and as the bond yields skyrocket, and by the way, they are rising at the fastest rates in history. Okay, I fully expect ISM to plummet in at least to the 45 range, and we'll see beyond that. And all of this begs the question, well, the Fed, and I'm sure Natalie will talk about this, the Fed raised rates 75 basis points this year, what they haven't done since 1994. Now, soon after that, right, it was game on for technology stocks and other exponentially growing assets. And we had the biggest, one of the biggest bull runs in a history in the dot-com era from 95 or 96, I guess, to 98, where it was just an incredible run. And I think as soon as we basically get into that 50 to 45 range, there's a very good chance that the Fed says, and the Fed is a trailing indicator, as I've told you all many, many times. They are not a leading indicator on the economy, okay? They tell you what's happened. They don't tell you what's going to happen. And I'm trying to give you a little insight as to what's going to happen. At least in my opinion. And I think what's going to happen is that as ISM gets into that 40, maybe 45 range, the Fed basically says, hey, whoa, we've got a dual responsibility to make inflation come down. And I think inflation is going to spike lower because of all the supply chain issues. We've got tremendous amount of inventories, and this ISM in this particular instance is telling us the supply chain is starting to spend less. Okay, why? Because we've got all these inventories built up. And I think that's going to start to lead to significant layoffs. We're already seeing it in the tech sector writ large. I think it's going to make its way into the broader economy in the coming weeks. Okay, and so at that point, what you're probably going to hear, I don't know if it's late summer, early fall, late fall, but at some point in that time range, the Fed is going to go, you know what? I think we've done our job, which is nonsense, by the way, but we're going to stop and watch what happens. What that means at that point is the recession is that we're going to probably have either is already here, has bottomed already, and we may be on the way out, but the trailing indicator that is the Federal Reserve is now going to pause rates. At that point, historically, it's game on. Okay. And when I say game on, I mean game on for risk on assets, particularly tech stocks and the higher beta risk on assets, including crypto, which is why I'm so bullish on the near term future for crypto. So very quickly, this is something that none of us want to pay attention to, but it's the reality that Bitcoin has had historical volatility with massive drawdowns. And we can see, in 13, 50%, 2016, 87%, 2018, 83%, 2019, 61%, 2021, 51%, and still falling in June. This is going to happen again in the future, just like it's happened before in the past. But this is, as I've told you many times, the price we pay for an exponentially growing asset. And I've showed you the charts in the past for Amazon, for example, which has had similar properties in the past. Now, here's an interesting chart that Orlin Ohan posted that I co-opted this morning. And this basically shows relative strength indicators for Bitcoin versus bottoms in price. And it is scary accurate. Now, I haven't analyzed all of his data to know if he's 100% correct in how he's plotting this. But when I eyeballed it this morning, it did look accurate. So take it with a grain of salt. And again, it's not investment advice anyway, it's just information. But you can go online and look at the information yourself. What this basically tells us in historical terms is that on a short-term basis, Bitcoin bottomed yesterday. And I have no reason to believe that his analysis is incorrect. Now, just because it happened in the past doesn't mean it's going to happen in the future. And it could also be a short-term bottom, by the way, meaning we could get a rise to 35K and then another quick drop to 21K, right? So it doesn't mean that it's the start of a macro bull trend, but I do think that even if we end up going sideways a little bit until that game on moment that the Fed's going to enable for us, I do think at that point it's going to be game on for crypto as well. Here's that RSI number without the price of Bitcoin to put it in context. And the light green turquoise line represents the bull runs that started, or at least in the case of 2019, the mini bull run that started to coincide with that RSI line. Truly fascinating. It's something I hadn't looked at in this level of detail before. Now, here's the chart that I've showed you many, many times, which is the price of Bitcoin on a log chart. And you can kind of see the level that it seems to want to be at, which is that white line, which is not quite the median for the moving average, but would be a little bit below that. But you can see every time we've touched that orange line at the bottom, since 2013, Bitcoin has had a run higher. This time, when it touched that line in 2020, it started started to run higher, but it wasn't as big as the last two runs, right? That touched the top orange line, and I think there's a couple of reasons for that. I think that the economy basically started to slow late last year, and also China mining ban put a temporary pause on network effects. I actually think that run up that peaked at 67,000, and I've mentioned this before, would have peaked much higher if it wasn't for those two things. And so we kind of had a external shock interrupting Bitcoin temporarily. Okay, but if you look at this and you compare it to the last two charts I showed you on the RSI, it makes a very compelling case that we've reached a short-term bottom, and Bitcoin wants to go higher. And I'm using Bitcoin obviously as a barometer for the broader kind of, let's call it, crypto economy, and at least for projects that are live, which have network effects, which seem to have similar price movements. I can't speak to the alternative crypto projects that aren't live yet, where it's pure speculation. Okay, all right, so. I'm going to stop here for a moment, and we'll get into. I've got some other stuff I want to show you when I bring on Lisa and Justin from the Abra team in just a bit. We're gonna get into a longer discussion on what everybody wants to talk about, what's happening in this whole kind of crazy lending stuff that we're hearing in the news right now, which we will definitely be getting into. All right. So, but first, before we get there, Abra's Bitcoin analyst Natalie Brunell is going to be up next with a look into the fallout from the latest Fed meeting and all things Bitcoin. First, we just wanted to mention we've laid a very solid foundation for Abra and have a very robust risk management strategy in place to protect you and your holdings. Trading crypto is the heart of the Abra app, and we've made it super easy to do. Take a look at this.
Trading on Abra is easy. Just click the exchange button. Tap the source you'd like to trade Tap on what you'd like to trade it for. Type in the amount. Then click Trade. Tap, type, trade. Totally easy on Abra.
All right, welcome back. Abra Bitcoin analyst Natalie Brunell is here with the latest crypto and Bitcoin news, including the Fed's latest statement, and she'll also cover the turmoil. It has some crypto exchanges reeling and get into what they're experiencing with all of this lending news. Hey, Natalie, how's it going?
Hey, Bill, it's so nice to see you. Man, I wish I had better news. It was so much fun when we were doing updates when Bitcoin was in the 50s and 60s, right? But we have another week, as you mentioned. You saw the charts of Bitcoin plummeting. And I'm not going to lie, I was pretty surprised to see it crash from the high 20s to almost the teens. These are price levels that we really haven't seen in years. They wiped away all the gains of our all-time high late last year. And I've really been feeling for the people that got in, for the very first time in the 30s, the 40s, the 50s, the 60s. I know that this period can be really, really hard, and it's sometimes hard to zoom out and realize that we have had bear markets before with drawdowns of 60, 70, 80%, and we're not even at that 80% range yet, even though it feels so painful. But I think Bitcoin is trying to create a new support level here near the 200-week moving average. It's only touched that line or gone below it a few times in its history, and usually it's followed by a pretty nice reversal that ultimately, takes us to new all-time highs. The thing is that we've really never had these unprecedented market conditions after all the money printing that happened as the result of the pandemic. So as you mentioned, as everybody probably knows, the Fed met again this past Wednesday and raised interest rates 75 basis points, trying to fight inflation. And Jerome Powell and other Fed officials are really trying to remain hawkish, and they don't seem to care at all about the massive downfall in stocks. There is a credit crisis that's brewing in Japan. US Treasury bond yields are inverting again. We have inflation hitting new 40-year records at 8.6%. Which I think is only feeding to the worry that there's going to be more rate hikes in the pipeline until really a liquidity crisis forces the Fed to pivot. I think a lot of people were thinking that the Fed would pivot before this period that we're in right now. And I certainly didn't think things would chop along in this way without something breaking in the system that would force the Fed to start money printing again. But inflation has been such a problem at this point. You mentioned the supply chain issues. I think unemployment numbers are really lagging. So, many people think that we're already in a recession, and the Fed is just not admitting that. So raising rates caused equities to crash, obviously caused Bitcoin to crash, and yet inflation has only ticked higher. So the big question is when and what in the system will break, and how will that all impact Bitcoin's price in the short term? And I know, Bill, you've also mentioned this. I know you're going to be covering it in the next portion of your show, but there's also a lot of just turmoil and questions surrounding crypto exchanges and liquidity. And Celsius is one of the big companies that was in the news over the last week or so. They offered really attractive yields, in some cases almost 20%. They had their own token, and you could stake that and earn interest. And that token dropped from about $7 a coin to 17 cents. And so there was a ton of fear online when Celsius actually announced that they're going to halt all withdrawals, all swaps, all transactions, and people have not been able to access their funds. And this really does shine a spotlight on, the fact that when crypto exchanges enter the market, that's a third party that you need to trust. Bitcoin is a trustless protocol, but crypto exchanges, you have to trust. And there were reports that the company has also hired an attorney, and they're trying to shore up capital. Binance was another crypto exchange that temporarily halted withdrawals. There was some sort of stuck transaction in the backlog, but I think those are up and running again. And then there are also been a lot of layoffs. You mentioned the layoffs are hitting the tech sector and also crypto. We had BlockFi announce that it was laying off 20% of its workforce. Crypto.com laid people off. Gemini, about 10% of its staff. Coinbase, about 18% of its workforce. And there's a hiring freeze that people are really critical about the company for doing. And just one last note on Celsius, I do think that Bitcoin's price drop could drop even further if and when users are actually able to withdraw their positions. And some people think that might not happen for months, but I think that there's a bit, of a backstop, and more companies, including Babel, are indicating similar problems. And so I think all of this is causing investors to just say, you know what, I'm going to take my money out and wait for Bitcoin to maybe drop a little more before I go back in. But That being said, I'm still very bullish. I think that these are great accumulation prices. I do think it could possibly go lower, but the fundamentals for Bitcoin are incredible right now. We've never seen more wallets with at least one Bitcoin in them. We have a hash rate that's at an all-time high, which means the network is getting more secure. Fees on the network are at an all-time record low. I think the strong hands are accumulating. And when Bitcoin does have a run, I think it could run very high very quickly. And also one more note on Bitcoin mining. Actually, there's been so much FUD in the industry because of mainstream headlines, and everyone says, the energy use is bad. People should ban Bitcoin mining like they were trying to do in Europe. But Bitcoin has actually been stabilizing the power grid in Texas these last few weeks. And I think it's making people change their minds a little bit about the power of Bitcoin mining. Bitcoin miners were able to shut off their machines. Riot Blockchain did a segment on Fox News talking about it because there was a spike in demand. And so Bitcoin miners were able to help with that so that the energy could be focused on people who need air conditioning during a massive heat wave. So normally in times like this, Texas has experienced sweeping blackouts. And now because of the relationship that energy producers have with Bitcoin miners, we're seeing a stabilization and a reinforcement of the energy grid, which I think has a lot of potential for the future. I think we're going to see more stories like this. We need more stories like this. And hopefully it'll change both public opinion as well as public officials' opinion on just the potential of Bitcoin mining infrastructure. So I do want to leave it on a good note because we have so much, so much FUD and frustration about the current prices. And we're not sure when things will pivot and change on a macro level. But I still, more than ever, I believe in Bitcoin. And I think we just need to get through some of the pain in order to see the other side.
So put you on the spot for 1 second. So what is the reality of what's going on with MicroStrategy and the loan and I think there was some FUD or confusion around the fact that maybe a collateral call or liquidation was imminent, and I think it's completely untrue. But I think people misunderstand the reality of how that works. Are you aware of the details?
When I've spoken to Michael Saylor, he indicated that they don't have to worry about that loan until Bitcoin drops to about $3,000, at which point there might be an issue. But I really don't see Bitcoin dropping to those levels. And I think that Michael Saylor is someone who entered into the Bitcoin space, understanding that this was going to be extraordinarily volatile in the short term, and that he did need to have enough collateral and a plan for if things were to take, a side turn for a bit. And I think ultimately, again, he's doing this as a long-term bet because he knows the potential of this network. So I think that a lot of those margin calls are mostly misinformation. But we'll see. I mean, if Bitcoin were to drop to $3,000, I think all bets are off, right?
If Bitcoin drops to $3,000, I'm selling my house. I don't even know what I would do to raise money to start buying Bitcoin. I just don't see it happening. I actually think though that what he did was a test. That's kind of how I look at it, because I got behind the scenes some ideas of how he's doing it, and I think. It was a regulated bank. It was Fidelity, a bunch of it. I have a feeling he was trying to test the system with a tiny, tiny loan. And of course, everybody in crypto blows everything out of proportion. Anyway, it doesn't matter. But I actually think it was a very smart thing he did to test that, because I think in the future, they're going to want to borrow against crypto in order to do other things with his core business or other liquidity options where they may want to avoid, certain tax obligations as a company, and having a model that's SEC compliant to do that. I don't know how you look at it, but it actually seems pretty interesting to me and could show other companies, right, that, hey, there's a way to do all this stuff that you want to do, even if you're not going to take 100% exposure to crypto like I am, that are tax efficient, are SEC compliant, and I can add it to my playbook.
Yeah, and he's really shined a spotlight on the fact that we do need better accounting regulation, accounting rules, right? And I want to remind people that if you talk about Bitcoin today's price compared to pre-COVID and all the stuff that happened on a federal government response level, we're up 100% from that. Treasuries, TLT, the ETF is down 15%. Gold is only up a little bit. Oil is up 70%. I mean, Bitcoin has still outperformed everything if you look at the time horizon of several years. So I know it's hard, it's tricky. I really do feel for the people that got in that, again, 40, 50, 60,000 range, but I think we need to zoom out and think about the long run. And that's what I think Michael Saylor has always done.
Yeah, I'm supporting your comment with I put the chart back up, which is my favorite. You've got to zoom out with Bitcoin, have a long-term view, understand network effects, and look, I didn't get into Bitcoin for the price in the first place. Independent of that, I have a lot of my personal wealth in there, but I think people get lost in this short-term price discussion. And whenever I do show this stuff, I try to do it with a long-term lens, meaning even on this chart, I only go out, I did quick math, 3 years, which really isn't enough. The problem I have is I couldn't get it all on the screen because I'm traveling, so I'm doing it on a small Mac. But ideally, it would go out 4 or 5 years, and you can see that white line, by the way, 5 years out, like Bitcoin would be at 1.7 or 1.8 million on that line. And so obviously the trend, I don't know, and obviously maybe the trend goes on forever, maybe it doesn't, but the question becomes, why would it stop now? I have no reason to suspect that it would. And as you said, that orange line is kind of that point where it's traditionally bounced. So
yeah. I mean, people were wishing for these prices when it was at 60, right? To be able to accumulate. So I think this is still a good opportunity. Maybe it'll go lower, but I think in the long run, Bitcoin always ends up growing. And I can't wait for the day where we're talking about Bitcoin at 100K. So
yeah, for sure. I just want everybody using this stuff to move money around, and I want it to basically get integrated into everything. Yeah. And then everything else will work itself out. So anyway, all right, Natalie, great job as always. Thanks for joining us. Great to see you. Have a great weekend. Up next, Justin McMahon, Abra's Chief Financial Officer, and Lisa Lee, our Chief Risk Officer, will be here to talk about risk management, how we safeguard and protect crypto borrowers and lenders. But first, check out all the different ways you can add funds to your Abra accounts. We've made it safe, simple, and secure.
Funding your Abra account is easy. Just open the app, then tap Add Money. To buy with your Visa or MasterCard, tap the app. Click Bitcoin through Simplex. Open in your web browser. Enter the amount, then paste your Abra wallet address and tap Continue. To transfer money from your bank account, tap on ACH Transfer, add a new bank account, Continue. Then select your bank. Enter your username and password. Confirm your identity with a code. Select account, enter an amount, and confirm. For a wire transfer, tap Bank Wire Transfer. Then tap Wire Instructions. Log on to your bank's online banking page, then initiate a wire transfer. Follow the instructions on the Abra app to input your account. Then send your wire. Transferring crypto is simple. Tap Deposit Cryptocurrency, then select the coin you're transferring. The Abra app gives you the receive address to send your funds to. Funding is easy with Abra.
Okay, gang, welcome back. We're going to give Tanner and Deepak a little bit of a reprieve this week. Hopefully they'll be back with us next week. This week, we're going to focus on crypto lending, yield. We've got Justin McMahon, CFO, Chief Financial Officer for Abra, Lisa Lee, Chief Risk Officer. Welcome to you both. Thanks for joining us on Money Talks.
Thanks for having us, Bill.
Great to see you. Let's dive right in. Why don't you? I would love to just have you guys introduce yourselves, and because a lot of folks that particularly on the retail side, if they're consumer investors, aren't really familiar with what goes on behind the curtains at a company like Abra. So it would be great, I think, if you could just introduce yourselves and explain like what you've been doing the last few years and how that relates to what you're doing now at Abra. So Lisa,
Sure.
You want to go first?
Yeah, why don't you go first, Lisa?
Oh, Lisa, are you on mute?
Maybe I'll go and Lisa can follow.
Okay, so why don't you start, Justin, and our tech wizard will get you on.
So I definitely am a traditional convert. So I came from the traditional space, spent about 5 or 6 years on the market making side. running operations and finance at various firms. And then prior to that, I was at Morgan Stanley for a number of years in the more traditional prime brokerage space. So went down the crypto rabbit hole about 5 years ago and haven't come back. So
awesome. Yeah, you joined Abra at a super interesting time, amazing inflection right around the time you joined. So you've seen quite the ride. And then of course this week with all the crazy press that some of our peers in space have been getting, it's crazy. Lisa, how's our audio doing? Oh no, I don't hear it. So hey, Mr. Wizard, can we figure out what's going on with Lisa's audio? And okay. Okay, Lisa, maybe you want to drop out and come back in, and I will start in the meantime. Okay, so Justin, I'm gonna bring up a slide here that basically shows how traditional kind of institutional lending works and I think it's no different in what you grew up with in the prime space versus what you see at Abra, right? So talk about the prime model in general. Just give us like a quick overview of how that works.
Sure. I mean, anyone who's kind of been in the traditional space on the broker dealer side or on the alternative side, hedge funds, kind of understands that obviously, prime brokerage and prime kind of works like a traditional bank. It's not really different other than, you're talking about large institutions, right? So deposits come in, collateral comes in, money goes out from a financing perspective. And that's kind of very basic, high level how, prime brokers and banks in general, make money. So crypto's no different. A lot of the ways that traditional prime brokers and traditional banks look to drive yield and look to make interest grow both for themselves and for clients exists on the digital and the crypto side. There's obviously a lot of nuances that go on within the crypto space just because of its emerging nature and it's still growing. But a lot of the kind of core pieces of that structure, exist for us as well.
Yep, that makes sense. Is Lisa back? I don't know if she's back, but we'll. I don't know. I don't hear the audio, so no, I'm not hearing it. Okay, so we'll keep going, and I think I know they're working on it, so we'll figure it out. Okay, so let's dive into for a moment some of the risks associated and how risk management in traditional lending works. And then I want to talk about DeFi because basically, if you're holding assets in Abra Earn, you're earning via a combination of mostly traditional lending and then a small amount of DeFi, and they have different but somewhat related risks. So we talk about credit risk, we talk about market risk, we talk about liquidity risk. Why don't you highlight like one or two of the things that you think matter most, and maybe I'll fill in some blanks, but I would love to have everyone hear your perspective on that risk management and maybe even how Abra might be a little bit different.
Sure. Yeah. I mean, it's kind of like trying to pick your favorite kid. I think they're all important. But, I think in markets like we're experiencing right now, high volatility, rumor driven, I think liquidity is obviously a really key piece that you have to stay very, very focused on. And I think, another focus that we definitely have is counterparty risk, credit risk. Markets are going to be markets. We can't control what happens with BTC price, but what we can control is who we're facing and the liquidity that we have, on our balance sheet. So, I think in these markets, you try and control what you can because you can't control everything. And so I think for us, liquidity, credit risk, counterparty risk are very key. And then, obviously duration risk and concentration are always, things that you're managing regardless of market conditions. They obviously, become a lot more sensitive to them in high vol markets. But, those are things we look at as well every day, every minute in markets like this.
And just to put it in context, right? I mean, if you look at the terms of service for Abra Earn, you have 1 to 7 day, basically up to 7 day access, meaning it should never take longer than 7. But I mean, I've done several deposits and withdrawals. And by the way, the team doesn't even know who it is when a withdrawal is being processed. So I don't get any special treatment. I've never had a withdrawal take more than like 2 to 3 days. Most are processed in a day if they're in small amounts, just given the reserves. So that duration risk basically says, hey, we can't have loans that we can't call within 7 days on average, because otherwise we can't process everyone's withdrawal. Now, most of our customers have been holding for a very, very long time. So holding funds with a 7 day duration risk is a super conservative approach. And banks wouldn't do that, by the way. Banks would actually do something which was much less conservative in order to optimize profits, right?
Correct.
Yeah.
Sorry, go ahead, Bill. Finish.
No, as you say, and then on the concentration side, it's just common sense. You don't want to have, all of your proverbial eggs in one basket, because look, the banks have loans that go south every single day. Everybody has losses in the lending space every single day. The most important thing here is to generate returns without subsidizing them at large scale, including a small amount of losses, right? It's not to say even though we've never had to recognize a loss yet at Abra, at some point it'll probably happen, but it needs to happen in a way where all of these risk management processes don't change what I just said.
Yeah, no, I couldn't agree more. I mean, listen, if this was zero risk, it'd be zero rates, right? I mean, there's a reason why you have rates, and it's a measure of risk to a certain extent, right? So, but we're also not talking about 20-25% rates, right, where the risk would be commensurate with that, right? So we have to, I think we take a very serious view into managing not only customer capital, obviously investor capital as well. And, we have a fiduciary responsibility for that, right? And so I think we take that very seriously. And I think, we talk about this internally, but, I think it's probably good for folks outside our four walls to kind of understand this, is that, there's a lot of stuff, crypto's great and it's revolutionizing the world, and we all love that. And that's why we're here. There's a lot of core things that exist in the traditional space that translate very, very well to the digital and crypto space, and risk is one of them. And so I think if you think about a lot of the aspects of how, a JP Morgan or a Goldman Sachs or, my old firm Morgan Stanley would manage risk, that is how we think about risk. And I think, the business or the market is not as mature as the traditional space. So I think there are pockets of the business that don't approach it that way, and that's just the nature of the evolution of the market. But we've tried to take that very seriously. So
impression is that a lot of these, independent of the Luna stuff, which was like kind of its own thing, and there were other firms that had large exposure to Anchor and Luna, and again, that to me, we'll get into DeFi in a minute, but it also falls under the concentration risk issue where, if it seems too good to be true and you absolutely have to go in, maybe go small. I don't know, but we're hearing more and more, and it's kind of I hate to say it, but it's kind of a function of laziness. Meaning it is very easy when something is super attractive to say, hey, that could be my personal bank account, and shove all of your money into something like Anchor that's returning 25%, which is probably too good to be true at scale. And if you're lucky enough to be the first one to get your money out when the shit hits the proverbial fan, great. But not everybody was that lucky, and so I think there's a big lesson there. I don't know if Lisa's rejoining. Lisa, just shout out if you're online. Oh, she is there.
Right, so I am back.
Lisa, we've been going through kind of the tried and true elements of sound risk management practice, just in a broad sense, but also at Abra. Yeah. And I know that you have a lot of policies that you oversee. And we also have kind of we have this very rigid risk committee process, and give us like a quick few 30 seconds on what the process. If I want to borrow from Abra, right? And what am I thinking is the process to actually even be considered as an institutional borrower?
Sure. I mean, so first of all, I would say Abra, right? You don't just wake up one day and, say we'll focus on risk. This risk first culture has always been in place at Abra, and, starting at the very top of the organization, and, really well appreciated at every layer of the firm and, every function. So this is so crucial, in a time like this. And, I think our overall approach, right, is very prudent, proactive risk management. So in terms of credit, right, we look for top tier, high quality counterparties. We look at various, metrics such as size, leverage, liquidity, revenue stream, but also, diversification is important, right? We need to look for a diversified client base, and ideally, right, clients that are, market neutral or non-directional. In fact, the vast majority of our clients, right, they tend to do better in times of high volatility. So, those are some of the things that we focus on.
Yep. That makes a lot of sense. Okay, so I want to segue into DeFi. Now, collateralized lending in the traditional kind of prime broker or now crypto sense is very straightforward, right? It's no different than maybe a HELOC on a house to a certain degree, right? You can borrow a certain percentage against the equity, and you get first in line. And if stuff goes south, in theory, I could force you to sell the home. And so no different here with the crypto collateral. DeFi is a little bit different. Somebody who's lending money into a DeFi protocol is actually doing this on a kind of an automated basis, meaning if you're lending money into or generating interest on digital assets, stable coins, Bitcoin or Ethereum, it's basically via an automated smart contract model. And then there are basically an entry and kind of exit costs for getting into and out of these positions. And I'm not expecting all of you to be experts on how DeFi-based yield works. It's part of the problem, by the way, with DeFi is if you look at what Anchor is doing or was doing and a lot of these other DeFi opportunities, people are connecting MetaMask to a web browser, barely understanding what connecting MetaMask to a web browser even means, and then basically connecting their Ethereum and USDC or Tether positions to these liquidity pools, also without understanding what I just said. And so it just compounds the risk because individual consumers are doing things that they don't understand. So now at Abra, we will use a historically a relatively small amount of DeFi. It's ranged anywhere from 5 to 15% of the assets at any given time. I think now it might even be lower. But what it takes, and I'll go to the next slide here, from a risk management perspective, to get through the gates at a company like Abra is non-trivial. So Justin, maybe start with you. We've seen a lot of these DeFi opportunities at Abra, and we've said no to most of them historically. In some cases, even ones where we wanted to say yes, by the time we finished our testing, our perspective on the opportunity had changed because it takes so long to get through our process. Why don't you just talk to what it means as a CeFi company to leverage DeFi for yield?
Yeah, I mean, listen, I think it's like any investment decision, right? You kind of have to make sure that you're a little bit skeptical going in. And to your point, there's a reason why things are 15, 16, 20% rates sometimes. Doesn't mean you can't manage that risk, but it means that you have to be really, really clear what the risk is. And so I think, when we think about DeFi, we take a very, very deep approach to how we look at the risk, right? So we don't just look at the top layer rate and say, well, it's really attractive and, we're going to go in very, very small. And if it doesn't work out, great, right? Even in small size, we want to be sure that we understand the risks, that the returns make sense versus the risks, and that we really kind of beat up all the different dominoes that can fall when it comes to DeFi. Because DeFi to me is very similar to, in the traditional space, futures and options, right? You really shouldn't be trading futures and options if you don't know what you're doing, right? Because it all looks good until it goes sideways. Right. And when it goes sideways, it tends to go sideways pretty quickly and in size. So, DeFi is an area that if you don't know how to play in it, you really shouldn't be in it, to your point. And so I think we feel like we've built the right team to be able to take the right risk return on that space. But to your point, it's not a major part of our book. And, I think at some point as it matures and becomes a lot more transparent and easier to manage, that, it'll grow in size like any part of our book. But I think for now, we take a very kind of prudent and, rightly skeptical approach to it. And we find the right deals that make sense for us. So.
Yeah. So Lisa, to kind of go one layer deeper there, we've been pretty successful in the small amount of DeFi we've done, but yet we've chosen not to expand it for all the reasons that Justin just described. Talk about like specifically one or two of the things that are essential to manage in order to generate yield on DeFi responsibly in a model like Abra's.
Sure. I mean, first, right, we focus on battle-tested protocols and strategies. We, like Justin said, we identify, risks that are idiosyncratic to the blockchain or blockchains and the smart contract. And, we do a very thorough risk analysis on all these components that you see in front of you. So basically, without going into too much detail, right, each finding in our review, right, we would deem it either satisfactory, requires monitoring, or it's an area of concern. So when it's an area of concern, before we do anything else, before we move further, we will look at the specific areas and we will conduct protocol specific analysis to address those concerns and to determine, are they how serious are they, does it prevent us from deploying? But I think in addition to that, right, the ongoing monitoring of these strategies, such as the pool concentration, depth, slippage, that's also just ongoing due diligence, right? We practice in our credit lending book, and we practice it here as well. But I think another part that's helped us, in these recent events on the DeFi side is that, we have contingency planning in place. We will anticipate, plan out the closeout strategies, the channels, the costs, and so when that time comes, right, we'll be ready. And going back to policies and procedures, right, we put in place a very clearly stated escalation procedures that will ensure prompt communication when an incident happens, and to all the decision makers.
Yeah, I think that's just, if I can add a little bit to what Lisa's saying, I think that's one of the things that I think we do really well here is we don't assume markets are always going to go up, and we don't assume that we're always going to be in a good, profitable space. And so, it's that kind of embedded skepticism that, when things start to turn a little bit, we challenge it, right? Like we don't assume it's going to kind of go back up immediately. And so to Lisa's point, that communication between risk, trading, and credit, exists daily, live, and it is critical to being able to react quickly, because one of the big differences between DeFi and traditional is the speed at which things move, right? Mm-hmm. So in a normal kind of traditional space, you might have, if you're lucky, hours or days to kind of react to market volatility or market actions or rumors. In the crypto space, it's an hour, right? Or minutes, right? And so that communication channel, those communication channels and that is critical. It has come up multiple times for us in the last few weeks and months. And it's really, I think, an underappreciated part of risk management. So
yeah, for sure. And I hear and realize over and over again, and for us, maybe we forget about it a little bit because we're just used to being kind of overworked, and it's a 24/7 space. If you came from the stock or equities version of this world, it's a lot easier to some degree because the stock markets are closed more than they're open. Our world is open 24/7. And so it's really essential that we have the team, the tools, the automated systems, whatever is necessary to ensure safety and soundness, given that we're talking about a 24/7 market.
Yeah, I have a very good friend who is a senior trader on the swap desk at a very large firm, and he always makes fun of me because he's done it 4 and he starts at 7, and that's it. So that's not us. And that's part of the cost, so to speak, of being in an exciting space like this. But you have to be constantly looking at the market, and you have to be constantly challenging what you're seeing. So
yeah, not all of the Abra clients actually open email or are subscribed to our email. I'll show you all while we're talking this email that we sent out. And by the way, you should really get on our mailing list because we actually are pretty good at not spamming people and making it important. And hopefully you can see on your screen in a moment. The font might be a little bit small because it's a longer email, or maybe our tech wizard can make it more visible. But we proactively reached out to everyone that we have an email for earlier this week. And the responses I got were a lot of gratitude that we were willing to be proactive, explain that Abra is fine, business as usual. We're not undergoing the issues that you've heard about from other folks in the space. We process deposits and withdrawals as quickly as possible. We pride ourselves in that. We use our own product. And so we, strongly believe that we should be treated no differently than the users. And I can assure you we're not. And we want the same safety and soundness for our own funds. I mean, I have all of my liquid assets in crypto and cash. I mean, in Abra, and I want to know that as not only as CEO but as a large client that we're doing the right thing by my money. Okay, so I'm gonna. Hopefully, you can go to the website and subscribe to the Abra email. So I do think we have a couple of questions. You've answered. I've been reading the questions as they're coming in. How do we think about, Lisa, how do we think about LTV as it relates to individual borrowers, as it relates to the overall position of Abra? Somebody was asking that in their own words, but it basically amounts to what does LTV mean for a lending model like Abra?
Right. So it's definitely one of the metrics that we look at, and but we also, the thing is that it's not a good leading indicator. So we are constantly trying to find out new ways, new metrics, to stay in front and proactive, right? This word has been uttered by us multiple times. But if you were to ask me, hey, describe Abra's risk management process in 2 words, proactive is definitely one, and prudent is the other. So yes, so that's
Wow, I love that.
leading.
I'm going to use that.
I'm going to use that.
This is not rehearsed, folks. So I am definitely using that. Well done. All right. Yeah. So I'm looking at some other questions. You've actually answered. There's a lot of questions here and a lot of comments, but I think they were you all on your own were addressing them, so which is great. I'll talk about C-Perks as everybody else wants to during the extended AAA session afterwards. But you've done a great job of answering the questions. Wow, it's awesome. Okay, so we've had this video posted as we do all the other videos. I hope you all will share it with friends that are curious about how all this works. We treat this like it was our own bank, because it is. And it's our own bank for our own crypto. And it's what I wanted for my own crypto, which is why we designed it the way we did, and in the early days with the Abra management team, trying to figure out how to build all this stuff, and it's paying dividends for us. Now we want to be here in 15 years as, honestly, I'll go on a limb and say, one of the largest banks in the world. And we'll have some announcements about what it means, and I keep using this phrase bank, and some legal implications of that, which I'm going to talk about in the coming weeks. And I'm really excited about it. I think if you're going to manage other folks' assets, crypto or cash or whatever, you've got to take a heavy-handed approach to doing the right thing, from a legal perspective, from a disclosure perspective, from a risk management perspective. And I really wanted two of the leading experts in the world, we're fortunate enough to have here at Abra, to give you their perspective on what's going on. So Lisa, Justin, thank you so much for joining us. And we definitely want to have you back. This is a topic that, I travel the world speaking, as you guys know, and when I bring up risk management, people are like, like this. And now all of a sudden, everybody wants to talk about risk management. Go figure. So it's an interesting time.
Happy to come back.
Same here.
All right. Well, great. Thanks for joining, and we'll look forward to having you back soon. I am going to do a short Ask Abra Anything segments today. I'll probably do it myself because we weren't planning to do it, but we've got about 9 minutes. But let's take a quick look at how Abra is one of the easiest ways for you to trade your crypto. We make it safe, secure, and even a little fun. Take a look.
Trading on Abra is easy. Just click the exchange button. Tap the source you'd like to trade. Tap on what you'd like to trade it for. Type in the amount. Then click trade. Tap, type, trade. Totally easy on Abra.
All right, welcome back. I'm going to get into some questions. Thank you again to Justin and Lisa. They did a great job. We're really lucky to have such talented and capable folks at Abra. I'm going to get in a few questions here right away. We'll keep it to about 5 or 6 minutes today. Thor chains. Ryan was asking. I usually go top to bottom, but I was just going bottom to top. Ryan was asking if it's on my radar. It's not only on my radar; it's on Abra's radar. Our token fund has an investment in the Thorchain token protocol token. Excuse me. I'm bullish on it long term. I'm bullish on native cross-chain swaps as a requirement for building out the DeFi banking model of the future. And thanks for that question. I'll just keep going bottom to top today. I hope, Lee said, I hope Amex card will be rolled out to international users. By the way, thank you so much for the support on the Amex announcement. We've had thousands of people pre-register for the card, and that's just awesome. And we haven't even really talked about international. I know, I have hinted at it. But I'm really excited about the idea that we could get this card or different versions of it out to international users. So nothing to say specifically yet, Lee, on international versions of the card, except to say I definitely want to do it. And it's something that eventually we will do for sure. I just don't know exactly when. Eli, we did talk about contagion risk earlier. So thanks for the comment. Let's see. And lots of positive comments on Amex. Thank you for that. Crypto Sonic was asking if we have exposure to Vault. I've heard of Vault. I'm familiar with it, but no, we don't work with Vault. And my team can correct me if I have it wrong. We have a lot of projects going on, but I'm not aware of any exposure there. Let's see. So a lot of people asking about CPRX, CPERX. We talked about it last week when Julian was on. You should go back and watch that video. Julian did a great job. We're investing heavily. Internally, I'm kind of calling it Abra Perks 2.0, but really what it is taking all of the lessons we've learned, integrating that into our new trading solution, into our new card solution that we announced with American Express, the new NFT stuff that we announced last week, and really making the utility of C perks and Abra perks, a tremendous value within Abra, and we have learned a lot doing that. And look, it's not all going to happen instantly, and so I want things to happen instantly all the time, and the product team reminds me it's not going to happen. So we'll just have to be patient. But I'm definitely bullish on the future of Abra perks and C perks within Abra, and obviously the dog agrees, so that's great. Yeah, so a lot of folks asking about my thoughts on what's going to happen with some of the other companies in the space, whether it's Celsius or BlockFi or others, and I'm not going to address that head on. I think I don't know what's going on under the hood there. I actually want them to make it. I think it's important for the space that we're healthy and thriving, and Abra is growing. See, bark twice if you agree. And so, but I don't know what's going to happen. I want them to survive, especially on behalf of a lot of you who are using their services as well as Abra's. But I have a feeling that there will be few of us left at the end of this kind of downturn in the market. And I can assure you that Abra will be one of them. So, all right. So let's see. I'll take a couple more questions here. Call it a day. Let's see. Talked about C perks. Yep. Yeah, I got it, dog. C perks. Yep. So let's see. We talked about, why Abra, a lot of folks asking why Abra hasn't had the losses that others in the space have had. And, a lot of it comes down to what we talked about with Justin and Lisa. Again, just to reiterate, lending, it really isn't about eliminating losses. If you're going to lend, eventually someone is not going to pay you back. Okay. The point of risk management is to not ensure that never happens. That's not realistic. The only way to ensure that never happens is to not lend. But you need risk management practices that are commensurate with the yield that you're paying versus the reserves you keep and the provisions you make for losses. And what you don't want to be doing is subsidizing yield. And I actually think that's going on at some of the others in our space. When they're subsidizing yield, it may sound great to you. Hey, yeah, it's free money, I'll take it. But it's unsustainable. So when you're generating yield or giving out yield that's unsustainable, it's irresponsible, because eventually you have to pay the piper and the system is going to break. Okay? Especially if that yield is based upon some token that they created as a security that they just printed like free money. Right? So anyway, my belief is you need sustainable yield that is not subsidized, that is not coming off of, my own asset pool, but is actually generated in a sustainable, responsible, safe way via the lending, the DeFi operations that we talked about before. Okay. So that is my personal opinion. I think I'm right, and we operate accordingly at Abra. So thanks for those questions. I'll take one more. Let's see. What's the latest on the timeline? Can you please publish a timeline regarding the trading updates that you promised us? Yeah, let me talk about that. So yes, we're taking a different tact than what we originally thought we would take. And Deepak explained this last week on Money Talks, our head of product. I'll kind of give you the short version of what he said. So originally we were going to launch market and limit orders in June and July. However, we've decided to integrate those into the new version of the trading system that we're planning to launch in a few weeks. And so that has a huge benefit to all of you in that the spreads versus spot are going to be much tighter. The cost overall of going from dollars to Bitcoin, dollars to Ethereum, and dollars to some of these altcoins is going to be much, much lower. And the downside, of course, it's going to take a few extra weeks. And so personally, I just think we made the right decision by taking this approach. And the other implication of that is it will delay C perks trading, which nobody, including me, wants to hear. But again, given we have to make some choices around resources, it's definitely the right approach. And so I assure you, all of this is top priority. I'm really excited about the new trading solution. And hopefully we'll have some very specific dates for you in the next couple of weeks. But for now, the best I can tell you is it's going to be a few weeks. It's not going to be a few months. It's not going to be a few years. It is going to be a few weeks. Okay. All right. So let's stop there. It's been hopefully a really useful Money Talks for all of you. Crazy times, of course. And we're trying to be the safe, the responsible, some of us like to say the adults in the room when it comes to managing crypto, generating safe yield, generating responsible yield, tried and true lending practices. And that's why we're here. Okay. So thanks again for joining. This is one of those videos I really hope you'll share with your friends. Click the subscribe button, share the video. I think it's really important for everybody who's interested in crypto, in the crypto space, to watch this video and understand what's happening at Abra and the broader crypto market. Okay. Have a great weekend, and we will see you all next week on Money Talks.